Welcome. I'm Barbara Call, Senior Director of Content Strategy at CIO Marketing Services, and I'll be your host and moderator for today's webcast titled Tax Reimagined, Digital Transformation in the Tax Department, and brought to you by CIO, Thomson Reuters, and KPMG. I have three guests with me today. First up is Kevin Permenter, Research Director, Financial Applications at IDC. Welcome, Kevin. Tell us a little bit about yourself.
Sure. Like you said, research director, been in the market research game for about 20 years. Here at IDC, my coverage area is financial applications. So everything from like your small business accounting apps through to the big ERP financial suites, and then into the key point solution areas like tax, like AR, AP, and treasury. I'm happy to be here. It's an exciting topic.
My second speaker is Satnam Singh, Chief Product Officer, Corporate Tax and Trade, Global API and Cloud Leader at Thomson Reuters. Tell us a little bit about yourself, Satnam.
Barbara, thank you and the KPMG team for the invite to discuss this key topic around the digital transformation of the corporate tax department. As you shared, I serve as the Chief Product Officer for Corporate Tax and Trade, as well as the API and Cloud Leader for Thomson Reuters. In that capacity, I head up product management for several of our key applications, including direct tax around income tax and tax provision, indirect tax, which is around determination and compliance for sales tax, VAT, GST, global trade, trust tax, information tax reporting, which is around 1099 reporting, as well as the platform that gives our customers capabilities around the data movement and analytics. I'm based in New Jersey and a proud graduate of the UNC Chapel Hill, a proud Tar Heel. So sincere apologies to anyone from Duke who might be joining this call or watching this.
All right, nice to have you, Satnam. And my third speaker is Amit Ringshaw, Principal at KPMG Tax. Welcome, Amit. Tell us a little bit about yourself.
Good morning, everybody. Hey, thanks, Barbara. Happy to be here. This is Amit. I'm a partner in KPMG's tax practice. I've been with the firm for about 21 years, and what I've been doing is focusing on tax and finance functions with technology. So I think this is a very relevant conversation, and I'm glad to be here on the panel with Satnam and Kevin. I look forward to a very good discussion.
All right, great. Nice to have you. And so we're going to start our conversation with a question for Kevin. Kevin, can you paint a picture of what you're seeing in the market for us?
Absolutely. I think the through line here in the tax space is definitely going to be about change and transformation. Everywhere you look, when you're talking about tax, corporate tax, whether on the indirect side with Wayfair and the changes to some of the VAT laws and GST laws throughout the globe, or you look on the direct side with changes around the 1099 reporting and income tax shifts. Everywhere you look, there's change. I like to think of it as sort of a Rubik's Cube that keeps sort of changing colors while you try to put it back together. I was never really good at Rubik's Cubes. Now I hear that people can do them in like seconds. But I think the analogy holds because as you turn one knob as a tax leader, something else, changes, and you have to keep all those things in mind. And you're often having to do it with legacy solutions. You're often having to do it with maybe spreadsheet sort of technology and tools. And what's been happening is that there's just the tendency to either throw a lot of people at this problem, resources, or pay the fines as they come in and just sort of call it a day and see what happens, or you sort of muddle along with best guess and sort of guessing or estimating as a sort of a business practice. So I think one of the key things that I see going forward is that yes, the office of the CFO is transforming, becoming more digital. And as a result, too, the Office of Tax, the head of tax, is also becoming more digital, more transformed. And I think also what we're seeing too is that tax itself is moving from being, sort of in the back office, way in the back office, in the back of the back office, all the way. It's moving more toward the center of the office of the CFO. I mean, look, we just heard from our co-speaker at Thomson, where he talked about 1099 tax withholding, tax information reporting. That's essential to the gig economy and sort of these contingent worker conversations that are really sort of relevant. The sales and use tax on the indirect side, the VAT, on the sales and use tax on the indirect side, very relevant to e-commerce and all the sort of skyrocketing trends around digital services and digital goods. The VAT piece, e-invoicing is reshaping and reimagining, forcing companies to reimagine their position in Europe, throughout South America, and into the Middle East, right? So I think overall, what we're seeing is that the areas like accounts payable, that sort of function is looking more toward compliance as being a central issue. You can look at the accounts receivable aspect, and compliance is playing a role there. Treasury, you can look, of course, at expense, travel and expense, where compliance is playing a role. I just think that as we move forward, we're moving into a future where compliance, tax compliance, is moving more toward the center of the office of the CFO. That's really exciting. It presents a lot of opportunities for the software vendors and the service providers in this space to help companies adjust to this new normal.
All right, great. Satnam, I see you nodding your head. Do you have any other thoughts you'd like to add?
No, absolutely. I love Kevin's expertise in terms of how he was able to take my two sentences and really expand on it. I think all of his insights were so on point, if you will, and valuable in terms of how this is no longer a siloed piece, right? This is an interconnected web, if you will, across various functions and functions that you would have never thought about really coming together or needing to come together. It's interesting. I also have a slightly different lens on it, if you will, where kind of the other side of the lens, which is if I think about like three areas, if you will, from tax departments, both in terms of their challenges and opportunities. I see process, technology, and people, right? And what I mean by process is, as Kevin was talking about, the complexity of the tax requirements, the complexity of what you need to do is getting more difficult, and the deadlines are actually getting more tighter, right? So if you look at what the corporate tax department must do, they must collect, they must review, they reconcile things that they've been doing in the past, right? But now with, for example, on the e-invoicing side, the size of the data becomes bigger, right? There's an enormous amount of data that they have to calculate. Then they have to report on it, and then you have different type of taxes like transfer pricing, VAT, cash taxes, tax credits. I can go on and on. And all of them require different information and calculations, right? So that's like kind of the process side of it, which is adding complexity. The second piece is on the technology side. Again, to what Kevin was talking about, if you think about e-invoicing versus how you used to report previously, that determination, the planning and the compliance, the movement of data that requires across teams, especially between finance and tax, is one example that's getting more complex. And tax teams have the need to reconcile that information, right? Data today is still siloed, right, to a certain extent. And there's varying levels of sophistication, if you will, on the business logic layers for self-service. I mean, in the Thomson Reuters State of the Corporate Tax Survey, tax department survey that we did, 64% of departments basically self-assess themselves as either chaotic, meaning they use spreadsheets and manual processes, or reactive, meaning they use some form of databases but not connected to enterprise databases. Only 12% of of departments said they were using analytical data-driven decision making with automated workflows. So we got a long way to go on the technology side. And finally, it's about people, right? I mean, we're looking at talent migration and attrition. There's from Thomson Reuters, we understand the challenges that our customers can face when they have to stay late nights, before the filing deadlines, right? And that's translating into tax departments losing team members to other companies and industries. And through technology, through better processes, we really have to bring this together, that digital transformation that we were talking about, that Kevin was talking about, to make sure that it's the future is easier, better, faster, if you will, both from an efficiency perspective and effectiveness perspective for these tax departments.
That's great. That's nice challenge outline. Amit, I want to make sure I get your perspective here as well. What are the challenges you're seeing?
I think the one thing that is very interesting are these new regulations, the BEPS 2.0, the things led by OECD around tax transparency, the new ESG regulation that's coming through for governance and social governance, environmental, and then that global focus. So the need to be globally consistent in how you are representing yourself is a very unique challenge. I mean, coming from a tax organization, traditionally the change in the tax has been driven by improving the financial flows. That has been the traditional big focus area. And now the idea that you have to be globally consistent in how you're positioning yourself, your company, and how you're presenting yourself to the regulators is really rethinking how tax was organized by organization. Internal tax were organized, breaking down those silos, allowing them to think globally consistent, or being able to work globally consistent. So something very unique and very interesting. We're already seeing tax organizations rechange their operating models, reorganize themselves along the lines of being able to better meet these regulatory needs and challenges. So that's one interesting area. Recently, obviously, we've had this big funding to the IRS. That is also a very interesting development, much needed, I must say. From what I understand, this is going to make IRS a better organization. It is going to be leading to transformation within the IRS as a function. And for most taxpayers, I understand, it is going to enable a better, easier to work with IRS. But at the same time, when we're expecting our regulator to transform and our regulator to become better, there is in turn an expectation that the taxpayer is also going to get better, right? And traditionally, tax functions, yes, one aspect of it is they are worried about seeing increased auditor activity, increased audits and notices and other things. But in reality, they're also going to need to transform themselves, have better access to data, being able to present a better picture. So I think if you really look at the landscape, both globally as well as here in the US, I think you're seeing regulators, really transforming themselves and the regulation as well, thereby expecting the taxpayer to follow suit in that manner as well.
Sort of comment on something that Amit said that it really sort of resonated with me. The idea too, that the tax authorities themselves are transforming and becoming better, suited to today's sort of tax landscape. I think it's also important to add on the idea that as complex as it is now, as many lines and sort of angles that Rubik's Cube of tax compliance has now, the tax gap is still such, depending on who you ask, it's well into the billions in different regions. Here in the US, well into the billions. One thing that we know is that no matter how complex it is now, it's only going to get more complex, right? There's only going to be more regulations. There's only going to be more efforts by states, by countries, by regions to close that tax gap. So I think that's an important piece, to understand as well.
Yeah, just if I may add one other thing here, which actually these are great points. So, Kevin, as you were talking about the closing the tax gap, right? I mean, if you look at the super fund, right, that just got reinstated 25 years after, right, on oil from certain oil and gas related substances, if you will, right? I mean, that's a prime example of really looking to close that gap, in billions, if you will, over the course of the next 10 years. And if you look at, the broader landscape of indirect tax and how that's going to bring into, more and more, if you will, to close that gap. And that's where I fundamentally feel the kind of data volumes that we've seen in the past is not a reflection of the data volumes we're going to see in the future, because that data in the future is going to be more granular, more atomic, if you will, than the data we've seen in the past. And that means two things. A, you have to think about the right technology infrastructure. You have to think about the right applications. You have to think about your applications integrating with each other. But then it also opens up the possibility, amazing opportunities to analyze that at a more atomic level than you've never had access to, that companies have never had access to before. So, so just wanted to add, some perspective there.
Yep, agreed.
All right, great stuff. We've been talking about the challenges. Let's talk a little bit about how we're going to solve this. And clearly there's two people at the table here, right? The CIO from the technology point of view and the CFO representing financial operations and taxes specifically. So what is so important about this collaboration and how can it help? Let's start with you, Amit.
Well, so, at the end of the day, we're all serving the business, the CEO, the strategy, the plan. And I think the expectation today from the CEO is for each one of these functions to bring, decision-making value to the table in time, and, being able to drive a business outcome. So, for example, activities like M&As, you need a tax function that is able to provide scenario modeling in a time-bound manner, and be able to really think about the post-tax revenue that would look like for the future organization, down to more granular level than you had ever been in making the decision. And I think that requires access to data, access to the deal, access to be able to think about it, plan the scenario, understand state apportionments, understand what the future organization will be able to look like all overnight, in how the deal making process works. It's a unique set of pressure, and that's not just the chief tax officer. I'm sure the chief marketing officer, all of the different corporate functions are facing the same value. So when the CEO is asking more from the C-suite, everybody on the C-suite is then looking back at the CIO and saying, hey, how can you give me that data, that information, those tools, those skills that I need in my organizations to be able to serve the business? And I think there is increased pressure on the CIO function now than ever. The good part about this is there isn't just people asking for more from the CIO function, but they're also willing to do more. So there is a rise in enabling technologies. There is a rise in the champion or the domain user, people who are not in IT, but are willing to use technology tools, have their domain expertise and knowledge, and be able to apply that and do things with these things. So they are, I would call them the citizen-led movement that is starting across the chain. So that's the good. The more interesting part of it is it puts more pressure on governance, pressure on enterprise alignment, pressure on cost management, and then being able to think through things. So while there is a lot of goods, there is also a new set of challenges that the CIO function faces. I think to kind of sum it up, the future of what we're looking at as the data demands increases, I think we're looking at data professionals are rising through the organization, across the chains, across the silos. And we're looking at the IT function change itself from being the doers to the enablers. And then to be able to do that, there is going to be a new set of rules, a new set of equation that needs to be created across the entire organization. And I think that's where we're trending towards. And it seems to be very exciting, at least as far as I'm concerned.
All right, Kevin, what would you add?
Yeah, I would definitely concur that the core problem is emerging to be the data management, right? Moving data into and out of your tax solution, at speed, right? So we're talking about doing that, especially in some of the indirect side of the world. We're talking about doing that in fractions of a second for some of the e-commerce applications. We're talking, and then even on the direct side, you're talking about speed when it comes to some of the micro transactions that are becoming taxed. Through Uber and Lyft and all the different rideshare kind of situations. Lots of really important sort of industries are requiring that the tax function and tax software be able to move at speed. Also, we're talking about scale, right? Being able to have these kinds of tax determination, tax capabilities, and be able to scale that across the entire organization. And the only way you can have that speed and scale is to think about the plumbing of the software, plumbing of the application. Getting data into it and out of it becomes essential. We talked a little bit about the APIs. We talked a little bit about sort of moving data via APIs. I will go a step further and say that, it's going to be the software packages that are built to function in this sort of highly dynamic world that are going to be best suited. And when I say built to function, I'm talking about those that are built around sort of microservices and containerization and some of these aspects that allow data to be incorporated in, to allow external resources, external data to be incorporated, all at speed and at scale. So that's what I think about when I hear that. I'm excited. I hope that doesn't come across too much. But yeah, I don't know. Maybe it's tough to find a guy that's excited about tax. But here we are.
Yeah, can I just add something, Kevin? Because you raised some interesting things in my mind. I think I agree with you. I think a lot of it is coming down to the right data management skills, the right data management strategy. And also about being able to think critically outside the box, right? And because we're changing in a new environment. So I think tax needs two things. It needs those skills and it needs those thought leaders, people who can think about what it would be. Absolutely. And what it is going to be looking like in the future. And again, the whole transactional level, I think where we're moving from a consolidated to a more transactional level environment is really unique and it's challenging. I think it's interesting because we're going to need to be level consistent. Like I said, globally consistent taxes. I also feel like we need to be level consistent, as a tax department, in the sense that we need to now really understand how to go from the consolidated information to the transactional and back and forth more seamlessly than we've ever had to, which is going to put additional pressure on our tools and our data pipelines and our technologies to be able to do that, and our people to understand that, to be able to apply regulation on transactional data and being able to do these are domain areas of machine learning tools. Like those outshine themselves in these areas, right? I think we're going to see that come towards to rising in the horizon. It's always been fascinating. It's tax and machine learning are like two polar sides of the equation, but I see, like, as we're moving down to the area of transactional taxes, I think it's an inevitable future where we're seeing some of these technologies being applied on transactional data. So yeah, the future is very interesting. The technology to solve some of those things are here today. What we certainly need is that thought leadership that helps us kind of merge those two things in organizations to come up.
Agreed, 100%.
Yeah. I mean, I'd add a couple of things. One of the benefits I've had of my career is, I've sat at the intersection of product, data, AI, and digital. And I've had the fortune of seeing, as well as being a part of creating the change in several different industries, if you will, right? So for example, you go back 15, 20 years, you look at the marketing departments 15, 20 years ago when digital marketing was very nascent, if you will, in its nascent stages. And you were faced with the same challenges. You said, oh my God, the amount of data I have is ridiculous. What do I do with it? And then you right. And this was the point when you had those annoying banner pop-up ads. They were starting to kind of, and then you had the birth of these data management platforms and customer data platforms. And you think about where digital advertising is today with real-time bidding, supply side platforms, demand side platforms, and none of that would exist if you didn't have what I see. I think about like three core areas. So number one, and both of you touched on that, in different shapes. One was the applications and the integrations between the applications, right? So how applications need to move from monolithic applications to more services driven, containerized, right? API driven, and a bit of a gory term called the headless applications, where you are separating the UI from the calculations, right, that run underneath this. So that's one bucket, if you will. The second bucket is data management, right? And great arguments, I just extended as one, is that organizations today are starting to get into that data management thought process. The piece where the right leap that's going to come is to treat data as an asset of business outcome, and not necessarily pure, say mission accomplished when you've got the data lake established. That's not the end all and be all. You need to make sure that can drive the business outcomes. It has to be. Which brings me to the third one, which is around the analytics, right? How do you get the organization to be more data driven, to be more agile, to be able to use? In my past life, I was tasked with turning around, Travelocity, which was the online, travel agency, and the ability to give data in the hands of our people who were market managers to take to each hotel and say, look how much business I'm driving. You got them the ability to get better deals, if you will, right? And I think while it's not an apples to apples comparison, I think that's exactly where we're going to get to in terms of tax. Now, a couple of things that I think about between the CIO and CFO specifically is this meeting of the minds. I think of CIOs, from their perspective, they're looking to kind of drive, technological solutions, as Amit, you said, robust form of risk assessment, strategic intelligence that corporate leaders need for decision making. And for the CFO, it's about translating those investments into shareholder value creation. Now, whether that's through revenue growth, margin improvement, asset efficiency, and creating opportunities for faster value realization, both through inorganic as well as the M&A activities, right? And that's where this collaboration really needs to come. I think that's where the CFO team can really help the CIO team in terms of saying, okay, how exactly should you think about the holistic ROI on the tax investments, whether strategic investment, assimilating different technologies. And from the CIO's end, it's about illustrating the value of those investments, both in terms of operational excellence as well as strategic initiatives. I mean, and this is, again, in my past life, I was the chief data and analytics officer for companies like MetLife, Travelocity, and others. And I can tell you the CFO was my biggest partner in crime to bring along, because ultimately I needed their buy-in, I needed their agreement, and I needed their sponsorship to move the organization towards that. So absolutely, I've been on both sides, and I can tell you that yes, this is a journey that I'm very excited for tax, because I think it's going to be amazing.
All right, great discussion. Thanks, guys. So I want to switch gears a little bit. So Nam, I want to talk about Thomson Reuters and also KPMG and what you bring to the table and how you can help.
Absolutely, Barbara. At Thomson Reuters, we have the one source suite of solutions where data integrations across systems and workflow integration is a key focus. Let me first start by talking about two solutions that are specifically focused on the data aspects, and then talk about integrations. With Thomson Reuters one source data flow, companies can reduce the corporate data, tax data collection and preparation time. Whether that be work papers to tax packages or to Section 199 calculation requests. The data flow will help customers get data readily available when they need it. All of this data is centrally stored in one database that can be integrated into tax applications. Speaking of data being centrally stored in one database, it brings me to Thomson Reuters Data Hub software, which is a centralized tax data repository for corporate tax data. Our customers need to enter their tax data just once, and then they can automatically leverage it across any APIs they're using without the need of any manual intervention. Data Hub is equipped to handle large data sets that and allows greater connectivity, so tax teams spend less time on data manipulation and spend more time on the tax data analytics. Data Hub also has APIs, as I talked about. For example, APIs to manage data ingestion, ingest APIs, or file uploads, extensions, and to extract data from integrations to other applications. And we have our partnership with Alteryx, and through that partnership, our customers can support essentially a holistic data lifecycle management of tax. So they can ETL data, and they can bring in data through ETL, prep the data through Alteryx, then use Thomson Reuters Data Hub for centralization, organization, and computation, and then extract the data through Alteryx for visualization. In fact, Andrew Marriott from KPMG, who is the 2019 CIP Taxologist of the Year, has a great case study with one of the firm's customers, wherein the customer utilized the combination of one source tax provision along with Alteryx for significant success. If I remember correctly, their clients of the firm was essentially they were normally taking 3 frustrating days to transform a trial balance in Excel into something readable for a presentation. But once they utilized the data solution from Thomson Reuters along with Alteryx, they were able to take that same process, that same transformation process of the trial balance in about 20 minutes, down from 3 days, if you will. Look, I could go on. I could take this entire hour. I could go on and on about the amazing solutions we have. But just in the interest of time, I'd like to share another interesting recent development. We've integrated one source tax provision with SAP S/4HANA using SAP's business technology platform. And what this integration really gives our customers is they get the market-leading patented calculation engine of one source tax provision that computes tax provision journal entries available for S/4HANA. Through this integration, we've automated the space between trial balances in S/4HANA and income tax provision journal entries. And as such, that integration lends itself to the efficiency of the financial period close, as Amit was talking about earlier. It reduces the manual intervention, it reduces inaccuracies or the opportunities for inaccuracies, and the time spent on tax provision during financial close, which is, again, an important point that Amit was raising earlier.
Thanks, Satnam, for running through it. Once again, KPMG is very proud to partner with partners like Thomson Reuters and Alteryx, and very happy to see the progress those tools have done, in bringing about change and transformation to our customers and to the market in general. That's great, and we're very happy for our partnerships, and I look forward to a lot of these tools that Satnam you're talking about. What we're also looking at is helping organizations think through how to apply these tools and technologies in the right way. Those deliberate movements, well thought through planned strategies. And so in other words, it's a digital operating model, really thinking about how you're going to operate as a tax department in this new world, and really be able to plan those things out. So that's one area. What's also very interesting and increasingly a conversation today is that strategy around the total experience, in really breaking down silos within the organization, really thinking about how can we weave together ourselves, the employee, the stakeholder, the regulator, the customer, all together and in one coherent strategy, so that we can deliver value that is, that kind of empowers everybody in this equation, empowers the customer, empowers the employee, really, helps us bring a change, a transformative change in the organization. To tax, the customer is a lot of that is internal, a lot of the customer is external, right? Tax is interesting and sits at the cusp of like these dual market customers. So that has been very interesting conversation. And lastly, none of these things can be done without those thought leaders and those future leaders. And so really thinking about what is and who is a future leader in tax function. What are the characteristics of the future leaders? What skills and what things they embody, and how can we train those leaders in our organizations? Those have been really, fulfilling experiences in helping our clients really think through those things with our partners. And in my experience.
Excellent. All right. Great conversation, gentlemen. Before we wrap up, I want to give each of you an opportunity to give a couple key takeaways for our viewers today. So, Kevin, let's start with you. What are those key takeaways?
Yeah, so the key takeaways for me is that the compliance function is moving toward the center, more toward the center of the office of the CFO. It's being involved in all the different departments, AP, AR, expense, spend management, procurement. So as such, compliance is becoming more high profile. I would say too, that something like e-invoicing is really sort of interesting, and it's a big sort of shift, as some of the conversations I've had with compliance vendors are saying that they've been pulled into conversations that they've never been pulled into before. Conversations around invoicing, conversations around billing management. These are new conversations for compliance vendors, and they represent new opportunities. And then I would say the last thing is that more and more we're starting to see that technologies like machine learning, like AI, are going to be not just sort of nice to haves, but as things keep getting more and more complex, I think they're going to be essential aspects of the tax department going forward.
All right, thank you. Amit, let's go to you next.
Sorry, I know you asked for one last comment. I got two, and I apologize. So the first thing I think is a movement of tax outside of tax. And I think we're going to see that increasingly come towards, which is tax coming and tax people involved with non-traditional tax areas and issues. And I think that non-traditional data that is required for tax decision making. So you're going to see a lot of non-traditional, and I would call that all tax outside of tax. And I think that's going to bring tax closer, and it is going to make a tax person work more closer with the rest of the organization, and for others to support tax for it to be successful. So I think that's one trend we're seeing. But the other thing I think is we're seeing is that there is a change in optimization and cost reduction, and that focus on just optimizing to a little bit to a more focus on value driven, which is great message for tax. And I think as tax is realizing itself in this new value driven organization, it's kind of getting its mojo back from reduce costs, cut down people, into rethinking and reinventing itself along the lines of how can I effectively help the CEO and the board make better business decisions.
Actually, Amit made a great point that I want to extend on. I love how he phrased this as tax outside of tax. I couldn't have said that any better. I think it's almost like, tax going from filing to driving or planning, if you will, right? In the past, it has all been about making sure you meet the deadlines, making sure you have accuracy in those deadlines. So it's all been about filing, and compliance. And now it's about, as we see that shift towards more and more data potentially being available, more and more, outside of the tax department, data integrations, if you will. I think we need to see that shift, if you will, to more of that driving or planning, if you will, for organizations, especially, within the context of M&A, right, as one prime example. So I think that's one. And Barbara, I'm going to take two as well. So, but I think the other thing is one that kind of naturally comes from it is the technology investments, right? The whole aspect of how companies will need to think about their technology investments. And I think the fundamental aspect here is understanding and agreement within the organization, alignment within the organization of the impact of those technology investments within the broader context of enterprise growth and effective financial management. And I think that's where tax plays a very important role. And going to steal Amit's words again, but tax outside of tax, I think will have a much bigger impact going forward. So I think, again, tax outside of tax and the whole technology investments that the organizations have to think through, plan through, I think those are the two big areas that I see as key takeaways and a journey towards a much better future.
I'm going to use that, Amit. I'm going to use that. Tax outside of tax. It's been
Royalty
a new theme word.
Go ahead for it.
Let's just make sure we give the royalty checks to Amit.
Right? Yeah.
All right, great stuff. Thank you, gentlemen. That really great conversation. That's all the time we have for today. Thank you again to my guests, Kevin Permenter of IDC, Satnam Singh of Thomson Reuters, and Amit Ringshaw of KPMG. And thanks to you, our audience, for joining us. For additional information on this topic, be sure to visit the resources section on your screen. For CIO, Thomson Reuters, and KPMG, I'm Barbara Call.
Thank you, Barbara.
Thank you, Barbara.